Good morning, gang. How's everyone doing?
Doing well.
Morning, everyone.
Morning.
Excellent. Rise and shine. Okay, guys, tell me, this is the S&P chart that's in front of you. We're going to break out through that 200-day moving average that everybody is eyeing. I think this is like the biggest thing in the world right now. Everybody around the world is watching the 200-day moving average in the S&P 500 index. So, we did have a pretty impressive, what was it, like more than 90% up day yesterday, Avo? You were looking at market internals?
Actually, I think it finished right at the 90% mark.
Yeah, and so generally speaking, the history has shown that when you get a day of that magnitude, you generally spend a day or two, a couple of days essentially just sort of going sideways in a chop fest before ultimately 5 days or 10 days later, even seeing more upside in the market. So I don't know if we have that in play right now, but that 200-day right there is your bogey. It also happens to be the major VOP resistance. And as I've shown references to the prior bear markets in 2001, as well as in 2008, a bear market generally tends to fail at the 200-day before taking the new leg lower. So that's what I'm watching, and only time will tell how we're going to proceed from here. But I have to say it was pretty impressive rally in the Russell 2000 index yesterday. You guys have any quick thoughts on this one?
I don't think it'll get to, or at least I don't think it will get through the 200 on its first try, but it will eventually. What's the other thing you just mentioned? I'm not used to early mornings, but oh yes, the 90% plus up or down day. Typically, or at least it used to be that way, that when it hit a 90% plus up or down day, it would pause and not have one for a while while it did something else. But recently it has just been not following that previously set template that it used to do. Now, especially in the past month and a half, we've had some 90 plus up or down days that follow others, which has totally been not something that I've seen in the past 10 years in any case.
The
I haven't gone back too far.
The two most recent examples of when we have, let's call it 85% up days, was back here on April 29th, and it was immediately followed by a major bearish engulfing candle. And then also between these 2 days, May 7th and May 8th, and then once again we had a doji candle, a fail at the trend line, and then another major sell-off. So I don't know if this is different any time or not. Like I said, the only positive thing looking at this technical, in my view, is the surge in volume. I think that has to be taken into account, because the previous pullbacks that we saw in the subsequent rally, there was no volume push behind this. But here we had a couple of hammer reversal candles over here, 3 hammer reversal candle, and then a big update, and all of that happened on heavy volume. So I think that in market internals in general, in the last couple of days, seem a bit better than what they had, what they were previously when we were retesting this resistance. Still, this 200-day is a major wall of resistance. So we'll find out what's happening. Okay, so from my perspective, the important thing is that Walmart is going to give us a nice boost today. It should really go all the way back to new 52-week high, in my opinion. I think the stock deserves to trade more than $135, $136 per share in the short term. It needs to go tag new 52-week high. But what an impressive quarter. Up 76% e-commerce growth, up 10% same-store sales growth, record. And the most important part that I thought was interesting in this outlook was, and I was worried about this a little bit, was margins. Margins held up rather very well. There was only 10 basis points of sequential deterioration. And what a lot of the retail stores are going through right now is a simple view that, they have to reinvent some of these stores. So they have to spend on CapEx, whether it requires putting glass doors in front of the checkout counters, whether it requires social distancing or realigning or creating more spacing between the aisles and such. and that was all very hard to do at a time of hoarding. So we have seen a lot of other stores that even if they were deemed essential and they remained open, they saw margin hit, and this is not the case at all in Walmart. The fact that margins deteriorated by only 10 basis points, this is a very positive in my view, and I think that's why the stock is getting rewarded nicely compared to, let's say, Home Depot, which is now almost back to the flat line, but it was down quite a bit in pre-market. After closing at 242, it was trading down at or 246. It was trading down all the way to 232 at one point. So moving on.
There's a bit of difference there too. I'm not sure about the US, but in Canada, Home Depot was closed for a bit of time, although Walmart was not.
Yeah.
Unless I'm mistaken. So I don't know if that impacts the margins or not.
Yeah, I want to quickly touch upon two things, and then I'll give you guys the controls. So very short term, I'm watching this stock, SWCH Incorporated. We discussed this recently in the chat room, and I believe it was Mike who had asked me about this, one of our clients, and I had presented a bullish case. And this chart is forming a pennant. It backed off a little bit yesterday from the trend's resistance, mainly because yesterday was anything that was related to tech or things that have been working simply started to pull back. There was weakness across the board, or relative weakness, I should say. But this morning I'm looking at it and now I'm looking at the Russell 2000 index is down 0.5% in the futures, and Nasdaq is up slightly. So I mean, we're going to possibly rotate back to the old playbook again. And if that happens, let's see if this thing starts to break out. It's a nice looking chart. And Citigroup yesterday had an interesting note out on this stock, and they were saying that while the large part of the revenue outperformance originated from project-related revenues to connect Google's data center into SWCH campuses, and I wonder that view, because I was not aware of this, that SWCH has tapped into major collaboration with Google to connect the data center on SWCH's campuses. Is that something that could turn into a large relationship with more recurring theme? And I think that means higher multiple and higher growth rate going ahead. And the last quarter that the company posted here was actually pretty good. And we mentioned at that time too that the weakness was a buying opportunity. So that's the stock that I'm watching. Avo, what's on your plate?
I'm looking at Boyd Gaming today. They are. Let me just grab my file here.
BYD, right? Yeah.
Yeah, BYD. As of tomorrow, they're reopening 3 Louisiana properties, and then on Thursday, 2 Mississippi properties will be reopened, and then next week there's 2 more in Louisiana. So 7 properties will be reopened outside of Vegas in the next week, and I think there's just a bit of momentum that's going behind this trade in anticipation. In Nevada, there hasn't been any reopening official plans in any case, although there's been talk. So I think it's an interesting trade here, not something to get married to, maybe not even get engaged, go out on a few dates and see how this works. I think it should do good here going forward on anticipation.
Yeah, you know, it's interesting you bring this up, because I was so surprised to see the size rally that we saw ended in this one, El Dorado Resorts. I believe it was one of our clients, Mark D, goes by Mark D, in the chat room on Friday, that was asking about Penn and El Dorado Resorts. And I mentioned that, you know, there was heavy leap call buying on Friday in ERI. And then over the weekend, we learned that the same exact thing that you're talking about, the casino operator ended up opening 3 of its properties. And so on Monday, investors came in and they just really bid up this stock. It was up 19% yesterday into this big air pocket. And so now you think that BYD could see a similar kind of reaction, and it has its air pocket coming up if it starts to break out through this $18 per share.
Yeah, I think so. I think there's anticipation building on how gamblers or players, however you want to call them, will respond to this. There's obviously some restrictions and to comply with regulations here at this time. I also was looking at RRR, which is Red Rock Resorts, but this is Nevada based. I don't know how many properties they have outside of Nevada. This is based in North Vegas, their big casino. I think they have some outside, but I didn't read anything about their plans to reopen, so I just switched over to Boyd Gaming.
You know, for
And gaming in particular, in gaming, the big casinos as well. Now, we know that Macau has reopened their casinos, as they have been open for a while now, though they were very much affected by the lack of mainlanders coming over because of the restrictions. So they had casinos open like Wynn, MGM, and whatever. I think LVS is also there, but they had no tourists. But now they've let in some regional bubble, as they call it. Tourists start coming in, so probably trickle in some more gamblers into Macau.
Yeah, you know, BYD has a really good technical setup. Excellent stuff. So let's keep an eye on this. And it's nice to see that a name like ERI yesterday was seeing, or sorry, on Friday seeing heavy leap call buying. Jay, what do you have on your plate?
So today I've got two names on my list. Number one, Star Surgical, ticker is STAA. So for those that do not know, they design, develop, manufacture implantable lenses for the eye, specifically implantable Collamer lenses, or they refer to that as ICLs. I noticed that there was some small activity yesterday in the July 42 calls that did add to open interest.
Okay.
Earlier this month, the company reported Q1 earnings in which net sales were up 8% and ICL sales were up 6%. Stevens, in their post-earnings note, commented that most importantly, the company indicated that the business realized the highest unit and revenue growth in the last 5 years during the month of January, and that China, Japan, South Korea were all growing well. And then, moreover, the company expects to resume the double-digit growth outlook that it had originally targeted for the second half of the year, so specifically Q3 and Q4.
Very interesting. You know, this has been on and off our favorite in the past. We've issued official trade ideas in the past too, but we haven't touched this in a while.
Right.
One to watch going forward from here. Excellent. What's the next one?
Next one is a name we've never covered, a company called FTI Consulting. Ticker is FCN.
FCN, okay.
Yeah. So they provide advisory services across the globe to multiple clients. The company is separated into 5 segments, with the 3 top segments being corporate finance and restructuring, which makes up 34% of revenue. In Q1, that segment increased 29.1%. The second segment is forensic and litigation consulting, which makes up 24% of revenue. That increased 6.2%. And then lastly, economic consulting makes up 22% of revenue. That decreased 7.1% in the quarter. And they said that it was due to lower demand for non-M&A related antitrust services. But the reason why I'm bringing, yeah, go ahead.
The first one you mentioned, which makes up 34% of revenues, that's the turnaround restructuring advisory service, right?
Mm-hmm. Yeah.
And you know that's my prior life, because I was in Conway McKenzie and I was in Alvarez and Marcel. Spent 6 years in management consulting before jumping into the equity markets. This was after I graduated from college. I actually still have 2 friends in FTI Consulting that are partners in that company. So a third of that revenue is turnaround and restructuring. That's precisely the business that actually flourishes quite a bit during an economic downturn, because that's when you start to get deal for a lot of restructuring that happens in the companies.
Sure. But actually, the reason why I'm bringing this up today is because on last Friday, the Department of Justice and a group of states were planning to file antitrust lawsuits against Google. According to Wall Street Journal, the Justice Department is moving towards bringing a case as soon as this summer, while the states are looking more towards this fall. And going back to their segments, the economic consulting, there is a subsidiary company within that called Compass Lexicon, which previously assisted Google with an FTC investigation into search bias that stretched from 2011 to 2013. So according to SunTrust Robinson in a note yesterday, basically this potential lawsuit could provide a sequential boost to this segment. And as I mentioned, this segment was one that was down in Q1. So just something to watch out for.
This is great stuff. This is like forensic research right there. This would make a great article for weekend research if you don't have anything else, in my opinion. It's a nice looking chart too, and I know a third of the revenue should get very interesting boost for the next couple quarters because of turnaround restructuring, and then the other lawsuit segment that you pointed out, that should also be the upside. And the chart has pulled back to a major VOP support level. 110 should remain major support. Interesting look. Chronicle, you go next, buddy. What's going on?
So I'm going to be watching very closely the residential building permits number that's about to come out. Housing starts is also going to be out, but really in terms of leading indicators, the permits number is going to tell us what housing starts are going to be anyway. So I'm watching that closely because contrary to recession logic, I'm seeing several correlating signs that the housing market is more resilient than we may believe. For one, mortgage applications haven't exactly fallen off a cliff. Like for the past 5 weeks, we've had up 7.3%, down 0.3%, down 3.3%, up 0.1%, and up 0.3%. Not exactly catastrophic numbers. And in monthly terms, applications are up 17% from the April trough. And secondly, the NAHB HMI index that came out yesterday showed a 7-point sequential improvement from April as well. Thirdly, interest rates are still low, which will likely remain low for the considerable future, which bodes well for this specific industry. And number 4, we have massive undersupply of affordable housing still. So if we get a solid permits number today, that's another one for the pile. And if the lumber industry says it's seeing new order expansion in the next ISM survey, I think that's going to be the icing on top. There is a home building stock that I'm eyeing, which I won't reveal yet. That said, I'm looking for a short to pair up with this long because as we've touched on, market correlations are really high right now. And this market is just as likely to power higher as it is to plunge at any given moment. So I'd rather make relative plays. So on the short side, I'm bearish commercial and office real estate, as well as potentially some office furniture suppliers as we come out of this COVID-19 crisis. So this is a pair trade that I'm working on right now for Jaguar Media.
Yeah, I'm so let's your play, the long play on which home builder you are going to endorse is going to remain a secret until we present it. But I want to shed light quickly on the short pair that you're bringing in that trade, which would be commercial real estate as a short. I do want to point out that just about 20 minutes ago, news came out that Starbucks is now seeking changes to its lease terms, and it wants its base rent for the next 12 months reduced. And interestingly, that news came out at the same time when Chipotle, as well as Shake Shack, as well as Ruth's Hospitality Group, which owns the Ruth's Steakhouse, all three of them also out with the same view that they're looking for rental concession. And so this all plays into that commercial real estate theme. But I have to say that as I were talking, I started looking at on some of these home builder stocks. PHM is just like the rest of the market, is attacking the major VOP at 3220, 3250 and above that. There's a major air pocket. DHI, DR Horton, same thing. So they are at resistances here. So there's something to consider. If they start to break out, then yes, upside. But there's also a chance after a major rally on Friday and yesterday that there may be a moment of pause here in short term because many of them are at resistances. All right. Anything else to add there?
Just a quick technical update. If we look at the chart of BHP, it's now reached the $45 entry trigger that I highlighted in my research note.
Okay.
So in terms of pulling the trigger, that short idea is now officially good to go.
Okay, excellent. We'll keep an eye on this. Hey, I want to quickly circle back with you, Jay. Excellent article that you just published on the homepage this morning about Northrop Grumman.
Mm-hmm.
And I was just reading this. These numbers are just huge. You know, in Cohen's upgrade note last week, the analyst said that the total GBSD has an estimated price tag of $80 to $100 billion versus Northrop Grumman's potential revenue ramp has been unclear. I mean, they only need to get small piece of that to see a major change in the revenue mix. And are you expecting that some of these awards will come to light sometime by August 2020?
Yes, this GBSD one is one of them based on what I've read, the fact that they have seen, acceleration within the award. So they should get it sooner rather than later.
Yeah, and we used to talk about these same JBSD awards like more than a year ago, but it seems like it has taken a long time. I was also watching industrials and machinery stocks yesterday, and we briefly discussed General Dynamics having a very nice technical look for a breakout as well. So who knows, maybe this entire group, the defense contractors, could actually get excited to the upside, especially if we start to see rotation from growth to value, as we discussed in Telegram as well. So one to watch. Interesting view on that. All right, gentlemen, thank you very much. Another very productive morning conversations with Jaguars. I will see you all in the chat room shortly. Thank you.